Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex forecast for the week starting of 28th of July to 2nd of August. A lot of fundamental things happened the previous week. The main event was, of course, the selection. Boris Johnson, he was elected to be the Prime Minister of Britain, and that's the main news which keep the market busy. This week we can expect not less interesting events when we will be exposed to monetary policy statement in Japan together with the outlook report, then the press conference, the CPI and the trimmed mean CPI in Australia, the manufacturing PMI in China, direct impact on the Australians and the Japanese crosses, ADP report, and then of course maybe the main event of the week, the FOMC statement, the Federal Reserve Funds rate, and the press conference to follow. Friday would be a closer of the week with the non-farm payroll, while before we have the rate decision in Britain as well. Hard to believe there will be surprise from Britain. The main event, and eyes are going to this event. You can see that according to all analysts, the Fed is about to cut the rate, and that's what the market was expecting. This is what the market is anticipating, and the biggest question would be here: will the Fed give the market what it wants or not? And also not just the number, but mainly the following hints on the next decisions. Many analysts expect from the Fed to go and to hint on several cuts to happen in coming period. Many others believe the Fed would make it like a one cut before any further action, if at all. A lot of analysts do not agree with the cut because the US economy is doing pretty good, so it's mainly the political pressure. So it will be very interesting to see what the Fed will give to the market. That will affect the entire routine the market currently has. So let's begin. Then we will go now over the charts and explain the previous week forecast. We'll review that to see what worked, what failed, what's still relevant, and of course to forecast what is expected in this week and the main interesting setups to discuss and to follow to trade. For all those of you who are here for the first time, I would like to invite you to subscribe to the channel. To do so, just follow the subscribe button below the video on the right side, and do not forget to allow the notification, the ring notification. Please leave your comment in the comment section. Your comments, your feedback, my motivation to keep doing this work for the community. You can share the video with anyone who you believe can have benefit by watching that. And I would like to invite you to join our free Telegram channel for trading ideas, videos, article, posts, and many more great amazing things, and to join the live trading rooms we do on daily basis. Just follow the links below in the description, and I hope to see you there with us. So let's begin. The first one on our list was the euro versus the pound. As long as the 0.90, 0.91 were holding, the expectations were to see the daily chart making a correction. So the idea was to get the 4-hour chart breaking and making the two waves move down. So after a couple of weeks, we can say, of expectations, it finally happened, and we got the two waves down. We got a blockage right then after a bullish divergence, And the concern sign that currently happens with the euro pound is the fact that we are crossing below above the falling trend line. Now, why this is a concern? Due to the daily cycle and the way it was developed, the 4-hour chart was expected to be the corrective cycle, therefore provide two waves. It did, but the problem is that it's a very high possibility to be all. It's an ABCD correction, and break above that could hint for further rally. Will that or not? Now there are too many contrary signs which make me personally go and put the pair under a neutral sign, and here is why. Fundamentally, Johnson was elected as a prime minister, and he is supporting a hard Brexit on whatever the price is. Bad for Europe. Then came Draghi and hinting for hard action to be taken. The European Central Bank hints of printing money, quantitative easings once again. They did not cut the rates, but they definitely hint on further steps to be taken. This is bad sign for the Europe. Great sign to the indices maybe, if they will believe in such action. But the bottom line is it's taking us back to history. Instead of going further with the improving signs, they go back and taking actions to ease on the economy. How good will all that turn to be? Only time will judge, only time will tell. Such experiments never been done in history with such deep potential impact, so it's impossible to judge. Back to the euro versus the pound. Current view is neutral due to the fact, not because it doesn't look as bearish as expected according to the cycles and so on, but the fact is that the current pattern here that was suggesting a possible continuation further and then two deep waves, instead of that, created only two waves, broken, and game over. Now, we still have a bearish hidden divergence building up. We still have the possibility of a ranging correction, which definitely could take place, but we don't have current facts and reasons for this sell to continue. So at least as for now, I go neutral on this pair. It made the move we wanted. No, it was not as deep as expected, but the two waves happened. And as I always said, we need to follow as traders not our wishes, not the lines we draw, but the facts that the market gave us. And the market gave us two waves and a bullish divergence. Accept it or deny it, that this is the fact, and this is the fact that maybe, as for now, the move down is over. As long as we do not have new signs, it's better to step back. I hold my bearish view, and one of the scenarios that I believe could happen here is the range, or maybe even one more false breakout. No problem with that. But as per fact, to be involved in the sell, currently, there are not any. So what I would like to see here is to go lower and to see some structuring to the downside. For example, false breakout and lower lows. If we have that, we can discuss about the sells again. Or if we start to make the lower highs, lower lows on lower time frame to verify the bearish momentum again, then we can discuss about sell the rallies. But at that moment, there are none. So the best thing as for today and the start of the week is to be neutral and wait to see how it develops further. Of course, for all those of you who are following the live trading rooms, we will be covering that as it is developing, as it is going. So just stay tuned follow up. Next one on our list, pound versus the Aussie. The idea was 2 waves down that were completed with the bullish divergence, and the fact that we are on critical level, the 100%. The zone of 177.50 down to 175 is very, very psychological level, which also comes with a clearance zone right here, clearance of this low, clearance of this low, and we can expect a retrace to happen from there. So our idea was to look for that to happen, and here we are respecting so far the momentum, right? The level. We are holding this low. It was ranging for a while. Then with the news from Britain, we got the movement up as expected. So what's next with this pair? I believe the correction could take us to further levels on the short term at least. So I would be not surprised if this is what will happen. And as long as this rising trend line is holding, I would be looking for retraces and further bullish continuation towards 38.2, maybe even up to 50 of the Fibonacci levels. Next one on our list was Euro versus the Australian. We wanted to see that pushing down to the critical level of 100 as a cycle, then start to make the correction to the upside. Let's take a look what happened with the Euro versus the Aussie. Here we are. So let's take a look here. So here we go. So we got the push down. It was smaller than expected a bit. It never reached the 100% level. It was blocked slightly before with 2 false breakouts, and of course the massive divergence that we've been talking about, and we started the rally since. So we got the most recent trendline breakout, and we got the higher highs, and then we got the rally. So what's next with this pair? This is a very good question to ask right now. According to the double cycle from the daily, we reached the target, which is the 38.2. So theoretically, the buys are over as well. According to the weekly, this is a triple cycle, and we can expect a further continuation lower later or sooner. So we currently see that there is a contradiction between the daily and the weekly and what they represent. After the daily bullish divergence, we expect the 4-hour chart to be corrective, and currently 4-hour chart is only one shot. So I think there is a good chance we will be exposed to anything like that before the next step of the sales, because currently weekly and daily are contradictory, and the daily correction is not yet completed and confirmed by the 4-hour chart. Again, the daily bullish divergence, 2 waves. 4-hour chart has to be corrective. Corrective could be 2 waves or a range. Currently, none of them have completed and happened. So right now, what happens is the weekly cycle and the daily facts are contradicted, and that's why we do not want to be involved. So the right thing right now is the euro versus the Aussie. As for the beginning of the week, is neutral and looking for further developments. Again, in the live trading rooms on daily basis, you will continue to see me covering the opportunities as they develop. Aussie versus the Kiwi, we wanted to see the trend line breaking to the upside, or start beginning of creation of higher highs, higher lows. Let's take a look on this one. The trend line is not yet broken. The divergence is there already, of course. And the 4-hour chart never created series of higher highs, higher lows yet. It did create a false breakout and higher highs for us, but then immediately reacted with a V pattern. Suspicious sign, nothing clear and obvious from this pair yet. So the anticipation is the same. We are waiting for facts. Right now there are no facts. So it's on the potential mode, of course. Once again, marking the trend line. If we break above that, we can discuss about buy retraces, or if the 4-hour chart would start and make higher highs, higher lows, we can then look for setups. CAD versus the franc, our expectations: retrace down, bullish hidden divergence to form on a daily chart, and the 4-hour chart to form this bullish divergence. So let's take a look what happened with this pair. Bullish hidden divergence came in play. On a daily chart, 4-hour chart made the move down, never managed to create a new low from here, like for obvious clear moving average divergence. So basically what happened here was a blockage of a continuing divergence. Now the bullish hidden divergence with the continuing divergence and the supportive area managed to, and the psychological 0.75, also very important fact, managed to hold this retrace down. This is the main trend line that the pair has for us, the big trend line, and if we manage to cross above that, then the expectations would be for further continuation. Personally, I expect the pair to continue higher. We will need this trend line to be broken for this continuation. Why it's not moving here? So our next one is Euro franc. We expected the level of 110 and or slightly lower, and look for bullish evidences. This is what we got here, right? A bullish divergence developing, a bullish divergence from the weekly developing. So what we wanted to see is one more move down towards this alternative trend line, and break above the trend line would give us the good sign. So let's take a look what happened with this pair since then. We got the move down. It was slightly below the 110. We reached the alternative trend line, not deep enough to complete a false breakout. It reached the level. 4-hour chart managed to make the trend line breakout here, and of course the most recent trend line, which came here. So we got the breakout, we got the movement to the upside. The daily trend line is yet to be broken, but there is one fact that we need to pay attention to already. The weekly is ticking up the divergence with this mini hammer. The daily with this engulfing and the divergence looks like let's throw it. Looks like a beginning. The histogram and the moving average. Again, we're stopping here on the bottom. This could be broken into a cycle, and the expectations are for further correction. So the way I see the euro franc is retraces down and further continuation is what would be expected here. Invalidation for this scenario would be the most recent low. Psychological level hold, cycle in play, bullish divergences in play. It starts to look good and healthy. Next one on the list, pound versus the dollar. I wanted to see the break of the most recent highs on a daily time frame. Never yet happened. Instead of that, we face a new low. Currently, no observation, no view from my point of view on the pound dollar. Removing that from the list It does not provide what we wanted to see. New Zealandian CAD, which was great with us on the last several weeks in a row, on the way to the downside, on the way to the upside, is simply classical. So we expected a rally, we got the rally, then we expected to move the move down, and we got the move down right here. So the biggest question is, what is next? According to the daily, there are two possibilities here. Why? This was a cycle by itself. Of course, we can break it into triple cycle, no problem. Two false breakouts, higher highs. The corrective cycle could be in play is two waves or a range. Both scenarios are completely acceptable. According to the weekly cycle, with this triple-double structure, triple, double, false break, trendline breakout, lower lows. According to that, the direction is to the downside for the long run. No real signs against yet. So, what do we have here is a long-term sell versus short-term possibilities of a corrective cycle. So since we got the move upside already, yes, it's only one leg, but there is a possibility of a range. What we need to focus on is the next further sell setups to form. How will they form? As I said before, there is a possibility of two waves to be structured here, and then we are entering immediately for the sell view, or we are going to hold the range for one more time, get some rallies after that, and then go and sell them. So if we take a look on the 4-hour chart, 4-hour chart has a structure of triple versus the double. It also is structuring some bullish divergence. There is a good chance that we will see some reactions to the upside here. The biggest question from this moment, once this rally will take place, if they will take place, because again, we can draw the line as much as we want, the market is the one to provide or not the expectations. So if it happens to provide the retrace we want to see, from here it will be the critical area to start and look for the next opportunities. What do I mean by that? Assume we get this retrace, and here we are building up some bearish hidden divergence. If that happens, it's a sell sign. If it does not happen, then this triple-double could turn to be the next rally level for the daily two waves. So we, as you can see, many scenarios how it will be developed. We cannot predict it any way around right now. So we need to wait for the facts. But the fact is that whatever happens on the shorter view should be the call for the long-term sells. And this is why I expect this is a sell retraces, or if we complete the two waves from the daily, then look for the sells once the two waves from the daily complete. Why? To join the weekly cycles. So to summarize that up, longer term sell the rallies is back in play. And for all those who do not trade for the long term, watch out for this level. If we manage to get the reversal here, this is the one that you can enjoy from in short retrace or longer one to complete the two waves. So that's from the New Zealandian CAD. The next one on the list would be dollar versus the yen. And one of my scenarios which I wanted to see is the two waves to the upside before taking the next further sells. These two waves are building up right now, and a bearish divergence is potentially building up as well. What do I want to see here? This leg, I want to see it structuring and finishing the divergence. If it does, this will be the trend line. break below that, and I'll start looking for the sell setups that I was waiting to see for a while. So that's for the dollar versus the yen. Euro versus the CAD, the expectations were to see continuation to the downside. And here we are continuing to the downside. My view did not change. My bearish expectations here remain on. I think we are going lower. Of course, some retraces could happen, but my view is sell the rallies, and it's still relevant and in play. So what are the next new ones adding to the list? First one, euro versus the dollar. Aggressive view, but still a view. And here is why my view returned to be bearish. First of all, the fundamental thing, the easing part from Draghi and the central bank, and the fact that Johnson elected in Britain and supporting a hard Brexit, not good signs to the euro dollar. And the main fact is that the daily suggested possible correction to the upside, but we never managed to gain momentum and start to create higher highs. And as explained on the previous videos, if we break through this level, which is the 61.8 expansion, if we break through that, it's back to bearish view. And from my point of view, that's what happened, and I think the euro dollar should go lower. Of course, as long as there will be no crazy surprises and the Fed might go and change the view this week, but at least as for now, the euro versus the dollar holds its bearish view. So sell the rallies is my personal plan for the euro dollar. I think we are going lower, and the next levels to pay attention to would be, first of all, the psychological 110 or slightly lower, and if it breaks through, which very likely could happen, 105 would be the next long-term destination. And the next one on the list is the pound versus the kiwi. I start to look for buy opportunities, and here is why. According to the weekly, we have a structure, possible structure of triple double, with this as a possible bullish divergence to 4. Of course, it could be not just two waves, but also a ranging correction, because we had a false breakout on the top, false breakout on the bottom, and we are currently revisiting the bottom. So this could be a structure of triple cycle to the upside, ranging correction. Now, if this is a range, the current move down has to be cycled by itself on a daily time frame, and it is. It has a bullish divergence in play, so the biggest question is what's next. The way I see that, as we got a false breakout and the structure to the upside, I think that pound kiwi has all the reasons to make a corrective cycle to be developed. So once this becomes a bullish hidden divergence and the 1 hour chart confirms that, meaning creating its own divergence, this would be the time to start and look for the further buy opportunities. That's the new additions to the Forex part. Now, as per commodities, gold maintained its bullish run, was fighting and holding on the same levels. My personal view did not change. We do not yet have any lower lows or bearish structures, so I still think it should push higher, and with any retraces, I believe we still might see the gold trying to create a new high. So this is the only one I currently have. Of course, silver is basically 1-to-1. I expect that this one is also to make a new high towards 1670, 1680-ish. As per oil, I've been asked a lot about that. I do not have a clear view. I don't think there is a good, healthy flow of money. You can see it also by the structure of the entire week candles really not clear, so I leave it alone at that moment. Indices, we had the DAX giving us a great bearish sign from the weekly false breakout, divergence that came in place, and the structure of the daily false breakout as well. There we go here. So what I wanted to see is retraces and sell opportunities. So here is what happens on the DAX: retraces and looks like sell opportunities, but we are still stuck in the same levels. Now the only concern I have here is not technical, it's fundamental. The easing part Draghi was talking about is a suspicious sign. The fact that the daily did not manage to create lower lows and did not yet manage to create a structure of lower highs, lower lows, and the fact that we got one shot back to the upside is a suspicious sign. So the DAX is yet fighting the same zones, but the fundamental view for the longer run, with the easings expecting from the European Central Bank and the technical view, are not matching. Therefore I remove my view, the bearish view, and it's neutral as for now. It does not mean I don't expect a long-term sales. It just the timing might be not as good as expected originally. And the next two are the cryptocurrencies, Bitcoin and Ripple. Bitcoin has beautiful magnet zone built from these two daily cycles. The first one is here and the second one is the next two legs. This is a massive area, psychological zone from 8,500 towards 9,000, and the next one, which is more critical, is around the 7,000. So as for now, I believe this momentum should maintain. The question would be, where will this divergence develop? Around the 9,000, slightly lower, or the 7,000. Personally, I'm more curious about this level for one reason. First of all, there are a lot of protection levels that will be located here. Second, that the duplication level right now is not legal for new retest on the same cycle, and that's why I believe we should see neither 61.8 area cleaned here, or all the way down to the psychological level 7,000, which is more the level where I'm interested in, and from there would be looking for further buy opportunities. So once we finish with the move down, 4-hour chart would provide its own size for the reversals like bullish divergences. One of these levels is the one that we'll be looking to trade. And the final one is the Ripple, which also suggests two massive zones. First of all, around the 0.26, 0.28. I believe we are going to make this move down, and once these become as a bullish divergence, this is the place where I would expect the further rallies to take place. So the move down, trendline breakout, should be a good sign for further continuation upside. So that's the forecast I have for the coming week. Of course, things might develop, things might change during the week every single day. I invite you to the live trading rooms that we have on daily basis to join us and to enjoy from all the interesting opportunities we cover day after day. Just follow the link below in the description, the Traders Academy Club, and I'm looking forward to see you there with us. Thank you very much for your time watching this video. I wish you a wonderful trading week. Vladimir Ribakov from Traders Academy Club, and I'll see you soon with other videos for you. Cheers for now, happy trading!